All right. Hey, welcome everybody to the first live industry panel of our Inside Edge edition of podcast for 2022. My name is Matt Ackley. I am the Chief Marketing Officer of Ritchie Brothers, and I'm going to be your host today. So let's talk a little bit about today. We've got a wide range of panelists today, and I know some of you have joined us in the past, and we focused a lot on sort of the U.S. construction industry or the Canadian construction industry. We have more of a global panel today. We have folks joining us from Europe. And we're really going to try to get into some different topics, right? So first, we're going to do a rundown of 2021. Obviously we're still in the midst of the pandemic. Omicron is, I think, hitting the world hard, although maybe starting to subside. Cross our fingers. We're going to take a look back and saw, what those impacts were in 2021. I mean, we know the equipment supply is tight, and we know that's had an impact on pricing. But at the same time, right, we're watching an industry that's changing. And so we're going to dig into some of those topics today, right? Really, stuff around, digitization, or, automation and different types of, electric vehicles and environment and stuff like that. And so we've really got a great panel and a great set of guests. So before I introduce the panel, let me just remind you that you can ask questions. We love questions. We want this to be an interactive session. We've actually kind of set it up as like a, almost like a meeting. You can see we're still admitting people, people coming to the meetings late like we always do in this Zoom or Microsoft Teams world. But we want this to be interactive, right? So use the Q&A functionality of Microsoft Teams. And let's get started with the panel of guests. So once again, great panel here. I'm going to turn it over to them. They're going to introduce themselves real quickly, and then we're going to get started. So Chris, take us away.
Thank you, Matt. Hi, everyone. My name's Chris Sleight. I'm the Managing Director of Off-Highway Research. We're a global market research and forecasting company focused purely on the construction equipment and off-highway world. I'm based in the UK, and I have colleagues around the world in many of the major markets in Germany, China, India, the US, and Japan. So that's me.
Hello, and I'm Carl Gustav Göransson. Nice to meet you. I'm based in Munich, Germany. I'm operate as a corporate advisor. I've been in the industry now for 25 years. I worked for companies like Volvo, like Cargotec. Most recently, I was running the construction equipment division of CNH Industrial. And as I said in the beginning, I now operate as a corporate advisor. I help companies to, define, implement, and execute their strategies, working with turnaround and efficiency programs. And happy to be here with you guys. Thank you.
Good morning, good afternoon, depending on where you're sitting. My name is Doug Rusch. I am the Managing Director of Rouse Sales. And for those of you that may not be familiar, Rouse is an information services business, an insights business that's exclusively focused on the construction equipment sector. So very relevant to the topics we're going to talk about here on this call. Rouse joined the Ritchie Brothers family back in, I guess, late 2000s, so a little more than a year ago. And at Rouse, we work with several hundred, I'm going to call them large fleet owners, rental companies, contractors, equipment dealers. And we help them optimize their fleet management practices, their what should they sell, their disposal practices. And through those relationships, we actually get really tremendous visibility into what's happening almost in real time in the used equipment markets. So I look forward to sharing some of those insights with you here over the next hour or so. Matt, I'll pass it back to you.
Great. And I'm Matt Ackley, and I'm just a lonely chief marketing officer, and I'm going to be moderating this panel of experts. And so, with that, let's jump in, and I'm going to start with Chris and Carl Gustav, and let's talk about some of the trends we saw in 2021. It was a fascinating year. As I mentioned, we've got supply chain issues rocking the world. We've got changes to this industry. We've got legislation being passed. So, Chris and Carl Gustav, let's get started with, what did you guys see in 2021?
Well, I mean, I think the first point to make is, Yes, absolutely. Everybody felt the supply chain issues and the shipping issues. But that is against the backdrop of 2021 almost certainly being a record year for new construction equipment sales around the world. China had been very, very strong in 2020 and started to cool in the second half of last year. So that took some of the heat out of it. But everywhere else last year really, really roared back. One of the things that we hear from many of the OEMs and the dealers that we talk to in our research is, I could have sold 10, 15, 20% more if only I had the machines. So I think that really underlines the demand which is out there. One of the trends that we've picked out as interesting is that we're seeing a real boom in construction equipment in the compact area. So you can define that in many ways, but the chart that you pulled up there, Matt, I've just put together, which shows compact equipment as anything weighing under about 6 metric tons. So it's going to be small excavators, small wheel loaders, skid steers, compact track loaders. And I think what that shows very clearly with those blue columns is the way that really hasn't had much of a cycle in the way heavy equipment has. You can see the ups and downs of the orange columns. But there you see compact equipment, growing really fairly steadily. That's driven by a lot of things. There's a lot of demand in developed markets, Europe and North America, and a lot of that is driven by rental. But you're also seeing a lot of demand in emerging markets these days. China's the obvious one to pull out. But yeah, I mean, it's a long-term, clear global trend. I don't know. I guess Carl Gustav would have a view on it. I mean, you used to make these machines and sell them in CNH and Volvo in particular. Was that something that you experienced there?
Yeah, I mean, you nailed it there, Chris. I think very much. I mean, as we see, compact is becoming more and more of a player volume-wise in the market. And as you mentioned, I mean, North America and Europe are very much driving this, but we also see the other markets are coming. And some segments really stick out. I mean, I think we'll come back on it later on, but I mean, we saw development on the CTL, and I think it's very much a couple of things. If you focus on the product, I mean, the way they are being developed, the way how much more, let's say, flexible you can use compact equipment and their ability to operate in different ways makes them more interesting for the customer to use in even more applications. I think also to pick up on what you said there, Chris, rental, and I know you guys also have done. We looked upon the development of the rental business, and rental as such is very good for the compact business, and you can. We also see the changes on how they're used, how they are purchased and operated. And rental is now developing more, and I think we'll come back to that later on also. But clearly, this is driving this change a lot. Yeah.
Yeah, absolutely. And yeah, so a good time to bring in this second slide. So what I've done here is taken a fairly long time scale. So on the left-hand side, this goes back to the early 1990s. And it just shows as a share of total sales, how the product mix in North America has changed. And it's a really good example of what we're seeing. So you see on the left-hand side, the really high volume products back in the 90s were traditional products like skid steer loaders, backhoe loaders or tractor loader backhoes, depending which side of the Atlantic you're on. And as the last sort of 2-3 decades have played out, you've seen an emergence of mini excavators, particularly in North America, and more recently and much more starkly, this huge surge in compact track loaders. Compact track loaders are now the highest volume products in North America. I think you can sort of see that to a certain extent they're replacing skid steer loaders. They're very similar machines with essentially a different undercarriage, but the volumes are such that we feel compact track loaders are kind of finding new applications. They're mechanizing new aspects of construction and possibly other activities like industry and agriculture as well. So the point I would make, just to kind of close on that, is over on the left, those 3 categories that are compact equipment. In the 90s, compact equipment was about 35% of the market in North America. And then if you sort of take your eye over to the right, you'll see now that those three product categories are, sort of 65% of the market. So again, it does emphasize how popular compact equipment has become in North America.
Yeah, and I think we can also say, we see the trends, Chris, also, in other parts of the world. For example, we don't have the European slide, but I think you have the same trend there as too, right? Yeah.
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 There's obviously a big yellow arrow drawn on there that's around 2020 and 2021, and that highlights one of the big drivers. Obviously, compact equipment is very relevant to residential construction activity, and that's been really a sort of a fundamental worldwide driver in the last 2 years. With interest rates at such a low level, it's really been fantastic for the house building industry. And on top of that, you've got the whole working from home dynamic for many workers, where they suddenly sort of think, oh, I've got to spend 2 years in this house with just my family. I need to move to a bigger house, or I need to extend my house. So that's really driven a lot of the residential construction activity, which is what has driven that spike that the yellow arrow indicates on that chart.
It's fascinating from my perspective. Just somebody who's comes from a different industry, just maybe I'm more aware, but I see this stuff all the time, right? I see this stuff all the time. Your landscaper has, I can't tell you, my landscapers have these machines now, mini excavators and stuff like that, when before it maybe was a lawnmower, right? And it's fascinating to see, this trend. And when you guys picked up on it, I'm like, oh yeah, oh my God, I see this stuff all the time, right, nowadays. So, let's shift gears a little bit. Obviously we've got this changing landscape of equipment. Let's kick it over to Doug, who on the Rouse side, they follow, what are the impacts of pricing that we're seeing, around the world in 2021?
Yeah, thanks, Matt. And it's obviously a question, what happened in 2021? What do we expect in 2022? That the Rouse team gets asked all the time from our clients. And if you take a just quick second and reflect, it's really quite remarkable the past couple of years that we've had in light of COVID and supply chain and changing dynamics in the equipment mix that Chris and Carl Gustav just talked about. What a remarkable couple of years we've been through. And Chris, you used the phrase "roaring back," and I think that's really apt, because it's also it's really quite incredible how our industry and how our businesses have adapted and adjusted to this just unprecedented time. And I can take you through, kind of playing back the tape, if you will, of how this shows up in the data. And we'll look at this in two different ways. One way to think about the used equipment markets is around volume. Chris walked us through some really interesting pictures of what's happening on the new side. We can supplement that with also what's happening on the used side, because those two markets, to a certain degree, kind of play off of one another. So I'll walk you through a couple of slides here just to give you a picture of what we're seeing in the used equipment markets. And the chart you're looking at right here is used equipment sales volumes in 2019. So really, we have to go back to 2019 to find an interesting base case, because the last 2 years have been so variable. And there's no axis on the chart. That's by design. That's not really the point. The point is to here, first off, look at the seasonality in used equipment sales. This is pretty typical that we have a big buildup in the first quarter. The summer months kind of ease off a little bit as folks are actually using equipment. And then as we move into the end of the year, for a variety of reasons, owners are motivated to sell, buyers are motivated to take advantage of some tax advantages that often are coupled with used equipment buying. We typically see a really strong November and December. So that's the 2019 picture. If you click forward, Matt, just one chart, we can layer on 2020 as a comparison point. And we'll all remember 2020 was the year that COVID gripped us. Many of us were in Las Vegas at ConExpo when this actually happened. And I think you see a really stark trend here. If you see March, April, and May, the government really sort of forced us into a bit of a shutdown stage while we were all trying to figure out what was going to happen. There was a lot of fear in the industry of, do I want to be stuck holding equipment? Am I ever going to be able to put this equipment back to work? And as a result of that uncertainty, we really did see a slowdown in used equipment volumes. Shouldn't be a surprise. We saw a slowdown in macroeconomic activity, in hiring, in really every economic trend that you can see, that you can track. But really what happened beginning in the middle of 2020 is you start to see that roaring back take effect. We started to see a lot more used equipment transacting. And that was a result of two things. One, infrastructure projects were deemed appropriate to continue. It didn't take us too long to figure out that we wanted construction equipment to continue, partially because it's a big part of the horsepower that drives the macroeconomy. So there was a real need for equipment very quickly after this COVID shutdown, a little bit of pent up demand there during the March, April, May timeline. And that resulted in quite a bit more used equipment activity throughout the balance of the year. The other thing that happened, we talked a little bit about rental earlier and the growth in mini excavators. I would extend that to aerial equipment, telehandlers. These are products that are largely moving through rental channels today as it relates to usage. They're really becoming rental first products. And some of the rental companies actually executed some defleeting in the back half of 2020 as well. I think that was a bit of a hedge against uncertainty of what was going to happen in the construction markets, the used equipment markets. And so that defleeting exercise drove, again, quite a bit of volume in the used channels through 2020. Matt, if you'll click forward one more slide, we'll play back the tape on 2021. And here you see another deviation in market volumes. Look at the first quarter, the navy blue line, tremendously strong sales volumes at this time last year. But once we get into the middle of the summer, May, June, July, and really through the balance of the year, we started to see used equipment volumes slow. And I think there's a lot of dynamics at work in any marketplace. I think the primary dynamic that we're picking up on here is the supply shortage. If you can't get new machines, you turn your attention to used machines. And once we've sort of soaked up a lot of that used equipment through that really strong first quarter, now there's just fewer used machines available. And when rental activity, which is a big part of the used equipment market, is so high, utilization rates are as high as they've ever been. Anybody who's renting equipment knows rates are moving in an upward direction. Rental companies are reticent to sell used equipment and cycle out of their fleets because there's just a better alternative to selling those assets. So we've seen this slowdown in the used equipment markets in the back half of 2021. I think that's really a byproduct of the constraints that we're seeing on the supply chain. But that said, those navy blue bars are not all the way down at zero, right? There are still a lot of construction equipment activity transacting through the marketplaces.
So just to give you some air, do you see this staying on for a while now, or how do you see this, the trend?
Yeah, so it's a great question, Carl Gustav. If you believe that this dynamic is highly coupled to the availability of new machines, right, then I would expect to see this sort of dynamic start to ease as that new machine availability starts to flow again. And if you pay attention to the manufacturers and their public earnings statements, that new equipment is starting to cycle into fleets. Rental companies are starting to recycle and drive more CapEx. New machines are starting to land. So I would expect this to start to change and ease over the course of 2022 as we work through these supply chain issues. But these things don't flip on a dime. These are complicated supply chain logistics concerns that are going to take some time for us to work through, especially given the broad scope of, these are global markets, right? Parts, components. These are global enterprises now, and that just adds even further time to kind of the process of working through these issues.
Yeah. And I think also, you can fix the supply side, but we also know that, we'll see in the numbers and everything, demand's at an all-time high as well. And it's, with infrastructure bills and things like that, it'll be interesting to see if that slows down at all.
Right? Yeah. And I think that's a great segue, Matt, to the next slide. One way to think about what's happening in the markets is volume. Maybe the more pertinent point for everybody on this call is what's happening to value, right? Because the used equipment markets, just like the used car markets, they change, right? What a used machine is worth in the market evolves based on both the supply side, which we just looked at, and the demand side that you just referenced, Matt. And infrastructure is, I think a big part of what's driving that demand. We're just pouring even more gasoline on a bit of a tight market. what would you expect when supply starts to constrain and demand continues to accelerate? It's been a long time since I took Econ 101, but I know tight supply and increasing demand results in increasing price. And that's exactly what we've seen. What we're looking at here is the used equipment retail value index. So this measures the price point at which fleet owners, whether they're a rental company or a dealer, are selling their used machines back into the marketplace. And you can see over that course of 2021, we have been in, I hesitate to use the word inflationary because that's not really the right connotation. It's an uptick in pricing. Machines are selling for more and more and more each and every month. And note that that line, it's not bending. It continues to go up and up and up. We've not seen a moderation in that month over month price increase. That's obviously going to be a reflection of tight supply and really strong demand. This is not a convention that's exclusive to the retail markets. As a member of the Ritchie Brothers organization, of course, we pay a lot of attention to what's happening in the auction channels as well, another disposal avenue for fleet owners. And really the two takeaways on this chart are, one, the auction markets tend to be more volatile than the retail markets. And I think that makes sense, right? It's a bit of when you're selling something unreserved, it's really a pure matching of supply and demand dynamics in the moment. And that creates a little bit more volatility in the sense of ups and downs. So you see that here, right? This chart has a lot more kind of bends and wiggles in it than the retail chart. But the more important takeaway, the second one, is you see that continued increase in prices here in the auction channel as well. And this actually goes all the way back to the onset of COVID. You can see that down dip in the middle part of the chart. That was the onset of COVID. That was the Connex time. People didn't want to buy equipment. That resulted in lower price points. But since that sort of 30, 60, 90-day pause, we've just seen a really aggressive acceleration in pricing. So if you're a fleet owner and you have a machine that, frankly, you're not using a lot and you're thinking about selling it, now's quite frankly, a fantastic time to sell it because pricing is so high in such over the long view.
Yeah, I mean, we've seen a lot of people actually choose to, use this point to actually, if you're thinking about retiring or getting out of, people are, hey, now is kind of, one of the times to do it, right?
Exactly. Yeah, and I think Rich has
Doug,
helped some of those folks dispose of their fleets at record price points.
You're sort of giving us the headlines there. Is there anything when you dive into the data that makes you think, the tide's turning either in what you see in volumes of machines coming to auction or anything that you're seeing in the pricing, or are we still sort of yet to meet, yet to reach the peak, or we're at the peak?
Yeah, so great question. And there's always a risk in looking at aggregates, right? Because underneath the aggregates are a bunch of very micro trends.
Absolutely.
And when we look at a big macro index that's comprised of things like 100,000-pound excavators, which are used for pipe laying jobs, as well as scissor lifts, which are used for residential construction, you're bound to find some different nuances in individual categories of equipment. What I tell you kind of writ large is, and I'll connect back, Chris, to some of the points you were making earlier. The compact side equipment continues to go up and up and up. And if we layered this chart on the page for something like mini excavators, we're not up 8%. We're up something like 30 or 35% relative to where prices were 2 years ago. So at this point, we don't see anything in the data that suggests we're at peak or even that we're approaching peak. Again, these lines, regardless of category, really continue to work in an upward right direction, almost regardless of what type of equipment you're looking at.
And I think
the pace of acceleration varies a little bit by asset class, as you'd expect.
Yeah, and if you were to, to add to your point there, Doug, I mean, if you would put on the new equipment sales, I mean, it follows the same track in terms of price and development. So it's literally, I would say, I mean, very close, same development. Yeah.
Yeah.
Hey, Doug, we just got an interesting question that I know is actually near and dear to your heart, and it's near and dear to my heart. And the question is, hey, do equipment owners get different price realization by selling in different channels? If you think of retail versus auction, why don't we discuss that a little bit, and sort of some of the trade-offs, if you will, between the various formats, which I know is something we've discussed greatly over the last couple of years.
Yeah, thanks for the question. Keep the questions coming. We do like them because it gives us an opportunity to get off script and chit chat a little bit. And it's a really interesting question. You know, these two index lines that we showed are both pegged to 1.0, but it's a different 1.0. Retail's pegged to retail, auction's pegged to auction. So really the question I think you're asking is, well, what's the difference, right? What's actually the difference? And when we look at the data at an aggregate level, there are different channels of sale in the used equipment market, and the channels of sale have different pros and cons associated with them. So when you find an end user of a machine, generally speaking, that end user is willing to pay a higher price point than what they could buy that machine for at an unreserved auction. But that comes with work, right? These guys aren't just growing on trees. You've got to find those customers. You've got to run that transaction. You've got to manage the transportation of the asset. There's a lot of work involved in selling a machine yourself. On the flip side, you know, through an unreserved auction, a lot of that work goes away. Ritchie Brothers, there's other auctioneers as well. I don't, you know, but Ritchie Brothers channels, for example, do a great job of driving demand and executing the transaction. But with that sort of easy button, if you will, you know, becomes a little bit more volatility in the price performance, and generally speaking, a lower priced return on balance relative to retail.
Yeah.
The good news is, again, I'll just kind of pull this back to Ritchie Brothers for a second. As we've grown our product portfolio, and Matt, you could probably speak to this better than I can, there are different channels of sale all across the Ritchie Brothers ecosystem. Ritchie List is really geared towards that retail-driven price point. We have a marketplace platform geared towards sort of a middle price point. Takes a little bit longer to sell than an auction. And then, of course, we've got our classic unreserved auction. So we're trying to match up a product set that really aligns with different priorities for different sellers.
Yeah, and I've always, you know, look, I've been doing this for a long time, you know, eBay many years ago, and you know, I always look at the trade-off as kind of, you know, Doug mentioned, you know, you know, time versus price realization, right? If you have, you know, if you have a lot of time and you have the energy to go find buyers and stuff like that, yeah, and you want to set a fixed price, you know, you obviously can potentially realize a you know, higher price point versus, you know, the alternate situation where, look, I don't want to do a lot of work. I just need the, you know, I need the money more quickly, right? Then an auction is going to work for you because you know it's going to sell, right? You know it's going to sell on that date and you're going to get the cash. And so, you know, look, we recognize this, and that's why, you know, more recently we have pushed into the area of offering all these channels, right? So whatever the need is, because we realize there's different needs out there, you know, we see that all day long. And so I think that's a great question. You know, as we talk about the evolution of just the auction industry in general, and just, you know, what online has done to price discovery and marketplaces and so forth, we see that changing. So great question. All right, let's jump to the next slide real quick.
Yeah, just so maybe one last comment here as we play back the tape on the last couple of years, and this is, I think, consistent with some of the things that we've already been talking about. We have seen a slight aging out of the equipment that folks are selling through the used channels. You see two different lines on here, the general rental line, which bounces, you know, around 75, 76, 77 months, and then the OEM dealer line. These are just different fleets, different types of fleet owners with different fleet priorities. But in general, over the COVID period, we saw folks aging out their fleets a little bit, which created older machines selling into the marketplace. And again, the driver of this trend is the inability to replace your inventory, right? If you can't bring new machines in, you got to hold on to the machines you got to either use them or to, if you're a contractor, or drive rental revenue against them if you're a rental company. So this is just another sort of different way of visualizing the impact that the supply chain issues are having on our used equipment markets, and that machines are just a touch older today, generally speaking, selling through the channels than we've seen in the past.
Maybe, Doug, I mean, you and I, we talked about this offline also, maybe, you know, to get your view on this, and we talk about, you know, the market, it has to become, you know, more transparent worldwide. You know, is it more of a challenge to move the equipment around in the world? You know, I'm thinking about regulation, stuff like that. I mean, might not have the stuff data supported here, but I mean, what's your feeling about how it has it made, or the different technologies, has it made it difficult to shift the equipment around the world?
Yeah, really interesting question. A lot of the big fleet owners in North America have for years looked at export opportunities as a way to sell used equipment. There's always been a concern that as these rental companies get larger and larger, can the North American market absorb all that used equipment?
Yeah.
Without cannibalizing other things that are happening. And so I think the way I would articulate this is over maybe 2016 to 2019, 2020, we did see an increase in the quantity of equipment moving offshore. It actually wasn't very difficult to find a container, fill it up with equipment, put it on a ship, and port it over to the sort of Eastern Asian markets or to the Middle East markets, where there was a lot of demand, picking up on some of the things Chris was talking about earlier, for small compact equipment, aerial equipment, as we moved away in those markets from things like scaffolding, right? So it was a nice matching exercise. The reality is, in the last couple of years, with the onset of one, Tier 4 engines, which create complexity for moving things into global markets, and two, the constraints in the shipping environment today, we have seen a lot less export activity over the last 2 years than we had seen in the 2 years prior to that.
Right.
Will that persist? I don't know. I mean, a lot of these machines can be adjusted in the aftermarket to move from a Tier 4 implementation sort of downstream to support other gas types, other fuel types. I don't actually know. I can't predict the future on what's going to happen, but certainly that complexity is something that fleet owners are grappling with today.
It's something which might only be transitory, because obviously North America, Japan, and Europe have led the way and gone to these emission levels that you need after treatment on your machine for. But what you're seeing now is a lot of emerging markets are going from sort of a tier 3 kind of market to, tier 4, tier 4.5. You're seeing that in China. That's, dates for that have been announced. They're coming in. Seeing that in India. Even so, and there you're talking about a huge job to kind of move that market up. But governments around the world are worried about air quality in their cities, and goodness knows if you've been to Shanghai or Beijing, you'll know about that. So I think the world is going there, and obviously fuel quality has to move with it. But I think this sort of problem we've had of sort of a 2-tier world in equipment is sort of going to close up again. But that will be all battery operated by the time that happens anyway. But it is interesting that I think it's probably sort of a moment in time that will probably pass quite quickly.
No, absolutely. By the way, I mean, fascinating discussion, guys, and we've got questions coming in. Some of them are actually related to electrification, and which we're gonna address in a little bit. But we got another interesting question, Doug, around, kind of related to this, do we think rental companies, and once again, this may be outside of our area of expertise, but do we think rental companies are going to hold larger fleets, right? And hold on to equipment more than potentially they have in the past? I don't know if anyone has any perspective on that.
I mean, I could say, Doug, you want to go, or?
No, why don't you lead us off, Carl Gustav, and then I can follow up.
Yeah, no, I mean, just chip in. I think, this is really interesting, and we touched upon rental initially, and I know, again, as I said, Chris, and your business, you analyze the trends of where this is going on rental. So I think we all can chip in here. I think, first of all, the way the rental companies are operating is changing, and will changing. It's more than a rental piece of equipment. It's services around it. So you will be buying not only the stuff used, you'll be buying actually software. You can buy fleet management and stuff like that. So and the new guys, they tend to become, let's say, more asset light in the way they operate. They will be, I think, closer to the OEM. So if they will have more equipment, I'm not sure, but clearly the way they operate, they will work in different ways. So it's a lot of things happening here. How they operate. I don't know what you guys see here.
Yeah, I think the only thing I would add there is maybe one way to invert that question is, do we see rental demand continuing to grow, right? Because the rental companies are simply going to respond to the demand for rental assets. And I do think a couple of just data points on that. One, You can look to other jurisdictions around the United States. Japan's a good example where rental penetration, kind of the percentage of people that choose to rent versus buy, is something like 90%. It's unbelievably high. So there are markets already in the world where contractors, folks that use equipment, have elected to say, I don't want to tie up my capital in owning a machine. It's actually a better value proposition for me to rent. And we've seen rental penetration in the North American market grow over the time we've been tracking this at Rouse. We're not nearly in North America to a level like Japan, and that might not even be the right ceiling to compare ourselves to. But certainly, we've seen that trend. And then I think you could add into that a lot of, again, the uncertainty around COVID. I mean, there is a lot of risk in owning machines. And when there's an alternative, this is not unique to equipment, by the way. There's lots of asset classes where folks have said, I just don't want to own, especially in younger, younger folks, don't want to own a house, don't want to own a car, right? We're moving away in North America from owning things. And I do think that'll have an impact on the fleet size and the management practices of the rental companies as they try to capitalize on those broader trends.
I think one point I'd add in here is the part that technology can play, because you're starting to see in lots of different parts of the world these sort of online rental aggregator type of platforms where the app or the website or whatever is not a rental company, but fleet owners kind of put their equipment up on there, and then you match a piece of equipment to someone who wants it, and it's transacted through the site, and away you go. I find that really interesting because it's not just rental companies that can participate in these, it's also contractors. So, contractors are always going to have pieces of equipment that are idle. So I think it's a very interesting way to, that not only that these old definitions of rental and contractor blur ever so slightly, but I think it's also quite an interesting way potentially to improve utilization in the global sense of equipment, and just all these machines that are lying around, get them doing more hours and more productivity.
No, I mean, I think that, and by the way, that is a perfect segue. We are getting tons of questions. Chris, you kind of led into digitalization there. And this is the slide we wanted to get to as we think about going forward. Just to let Chris and Carl Gustav, before you jump into this slide, just to let I mean, we've got questions around, obviously, the alternative propulsion, are we, where are electric vehicles going to be? Chris, maybe we've got a question about red versus white diesel in the UK, and what impact that's going to have on the transport market. So lots of good questions. I'm going to let you guys dive into some of the concepts on this slide. And, once again, let's keep up the robust discussion. This is amazing.
Okay. So how do you start? I mean, should I can pick up on the electrification, and then I think you should also go from your side, Chris. I think electrification is coming. We know that. I mean, we saw a couple of introductions, I think, in 2021 and even before that, and it's very much focused, I think, on the compact side. There are quite a few OEMs active, offering machines out in the market, and they are operating very well, good feedback from the customers, and they are meeting the regulations that are coming more and more. So it's beyond only engine emissions. It's also, meeting the standards in terms of noise regulations, and they, again, the connection, compact equipment, the way the world is growing, that people are going to live more in cities. The concept of people living more in cities is not new. I think in 2008 or 9, you had more people on the earth living in cities, so it's already a thing happening. So that's going to happen. I think, Chris, and I'll let you also make a few comments here. I want your opinion. I think it's not let's say that the expected pace of electrified equipment in numbers is not hitting exactly as people think. It's not a huge thing, but I think it's going to come. Maybe, you want to give your view on that one too.
Yeah, it's very interesting in that we've had about a year of electric machines actually genuinely being available on the market, and call me cynical, but there is a big difference between walking around Bauma or Conexpo and seeing these gold-plated things on display. But we're genuinely seeing them in the market now. The numbers are small. In the market that off-highway research looks at, you're talking about a global market of about 1.1, 1.2 million machines per year worldwide. And the number of electric machines sold in the world last year is, at best 1,000 or 2,000. But, you're already seeing some quite interesting things. Yes, a lot of it is happening in compact, and compact is obviously, the more sort of straightforward thing to happen. But at the same time, you're seeing, Liebherr have an electric 200-ton crawler crane. You're seeing some of the people making piling rigs coming out with electric machines of sort of a similar size. A news story just at the start of the year of a Dutch contractor which had commissioned an electric asphalt paver with a sort of 5-meter working width. In Norway, you're seeing really quite big excavators actually being converted by dealers for fully electric use. And actually, the very interesting place to look on electrification is China. What you're seeing in China is not so much the excavators, but the wheel loaders. The popular wheel loader class in China, they tend to talk about it in terms of their capacity in terms of mass. So it's a 5-ton wheel loader. As a diesel machine, that would be a sort of a 200 to 220 horsepower machine. And they're the machines that the Chinese market is trying to electrify. So I think, there's a bit of we're having a bit of a rethink about, is it really just going to start with 1-ton excavators and edge up, and then when battery doesn't work, then you go to hydrogen? I think it's very interesting that it's the heavier equipment that's also kind of having an impact here.
Yeah, and I think, and just to dwell on that, and also come back to where you came from with the question, Matt, and pick up on, I think, on what Doug said when we went through the pricing also on I mean, these type of equipment, it's not, let's say, not trying to be funny, but it's not the cheapest stuff around that comes out there. I mean, it has to establish in the market. And I think also this will drive as you said before, Doug, I mean, the ownership model. How will the customers own them, or will they rent them more? How will and I think there was some questions also on, the used equipment prices of these type of products. So a lot of things will happen, I think, in a very short time frame. Just thinking, I mean, I want to comment a bit about, this is a tough word in English, digitalization. I tried my best.
It's a tough word for me.
and I think maybe a few words, I think, to say that
go ahead. And then we did get a question on the electric stuff we'll come back to, but go ahead and talk about it.
I'll just touch upon it and say, basically, I think, it's been, what we'll see here is the business models will change. I mean, it has been very product focused right at the moment, but the way we offer the things, I mean, there is online business taking place, but there will be, I mean, in terms of new products, but I think we'll see much more focus now coming on, besides the product focus that we digitize first, I mean, the business model of business. But let's go back on the electric thing, Matt.
Yeah, we just got a question, some folks out there are lenders, and how should they start to think about the residual values, of this electric equipment? Will it hold its value 3 years down the road? Will there be a market for it? I think that's an interesting, once again, this is new. I'll throw that out to you guys. I have my uneducated opinion, but what do you, will this stuff hold its value?
Well, yeah, it's a really interesting question. I think the answer is, ask me in 5 years. I think, first of all, I think that the crucial point really is the battery. I think there are questions about battery technology and the durability of it, and I'm sure we've had the experience of having a mobile phone or a tablet or something like that which works perfectly well, and then after so many charging cycles, the battery is the bit that breaks, and that kills the whole thing. So I think there are concerns about the long-term durability of the batteries. But I mean, an important thing to make about electric machines is you're starting to get these sort of fully electric machines where it's not just battery and electric motor replacing fuel tank and diesel engine, and it's still driving a hydraulic pump. You're starting to get manufacturers that have a fully electric machine, from battery to drive motors for the tracks that are electric, to electric actuators for the boom or the bucket or whatever it is. And I think that's really interesting because you know, the maintenance problems that you get with machines are, you know, a hose has burst, or you know, something's blown in the engine, or an injector's dropped into the cylinder, or something like that. And I think one of the very interesting things about electric is you've got a much smaller component count to make the machine, to get the power to where it's needed. You don't have to run a circuit of high pressure hoses, you run a cable, and then there's so much less to maintain. You know, you're not looking at fluids every day and spinning on and off a filter every 500 hours and a major rebuild 5,000-10,000 hours. A lot of that goes away. So from that point of view, if there's less to maintain on a machine, there's kind of less to go wrong. So the residual values should be strong, I would think.
Yeah, and I tend to agree. I mean, just not to repeat what you said, Chris. And I think, you know, one other thing. I mean, if you take, I mean, some guys of us might have a, you know, electric car or hybrid. I drive a hybrid, for example. I think as an owner of that type of car or equipment is, do I have access to the power? I mean, how quickly can I charge the equipment? I mean, if that's around, so I'm talking, you know, infrastructure. I mean, that will also support the resale value. So,
Yeah,
but it's gonna. I think it's gonna be there. Yeah.
The
Yeah, I mean,
charging.
I know what I'm paying for electricity for the house in Sweden, Carl Gustav. So
Yeah.
that's another thing to be
Yeah. We forgot that piece as well. Sorry.
I think charging and charging infrastructure is kind of quite an interesting one, especially with construction equipment, because sometimes construction equipment is used where there isn't anything. And my suspicion about a lot of these electric machines is that, you know, that overnight they may be being charged on a diesel generator, which, you know, okay, if you have to do it, fine, but that's not really seeing the big picture. But one of the interesting things about the paver I mentioned, which was sold to a Dutch contractor, what they went for was the removable battery. So, you know, the charge is down, they've got another battery slotted in, and you don't have to have it down for 8 hours or whatever. It's just, you know, a job of minutes to change the battery. So I think, you know, if the mindset sort of starts to move to that sort of thing, you know, the big problem is charging time and availability of charging. If you take the battery out and put a fresh one in, that deals with one of the big problems around electric equipment.
Correct.
No, we just got, you know, a lot of fascinating questions and comments coming in on this. And I just, you know, one of the things we're going to do, given the nature of all the questions here, and I mean, this has been incredible, folks, is we'll when we recap this and send this out, we'll take all those questions and we'll put some written, you know, responses in a blog and a blog post and stuff like that. But just fascinating discussion, great topic. Anything you guys want to hit on this page before we I know we're running close to the hour before we move on? Any other big comments you guys want to make?
Maybe I can do one. I mean, I think we both have autonomous driving and connectedness here. I do think, and there's nothing new, I still think connectivity is going to be the main driver. You know, because of course, autonomy for certain applications, if you call stationary applications in the industry, it's good to have this, and we see lots of, you know, good progress here in this, but still on the utilization or fully utilize the connectivity of equipment today, and also be able to use the data in the best way. I think it's still going to be, you know, the priority. Just to finish up from my side, I don't know what you guys, if you want to add something, Doug and Chris.
Yeah, I'd just like to pick up the point that was made about the UK, where we have red diesel, which is taxed at a much lower rate than on-road diesel. You know, there are a couple of things that can drive electrification, and when you talk to people in certain countries, there are subsidies and incentives to buy electric equipment. But of course, the other way to do it is that governments can use the tax levers to kind of push people one way or the other. And that change in taxation for the fuel in construction equipment in the UK, you know, is a problem, because it's a price increase that has to be passed on. But clearly, it's just one of a number of things that are going to push people to thinking, yeah, hang on, let's give electric a try, because all of a sudden, you know, I've got this big lump on my costs, and now I've got to buy a stage 5 machine with all this extra after treatment, and I've got all these heavy maintenance needs because of that. I think there are a range of things that'll just kind of gradually happen that'll tip the scales more and more towards electric.
Yeah, that's an excellent point. And so let's do this. Like I said, a lot of questions coming in. We will uh, gather those up and make sure we're answer those, and we'll get them out in the blog post when we send out the recording of this discussion. Absolutely incredible. So let's shift, Doug. Let's come back to you, and as the pricing guru here, and talk about. We're going to ask you to look into your crystal ball, and what are we going to see in 2022 and beyond?
Yeah, I'd like to just fall back to Chris's statement that you can ask me at the end of 2022 what we'll see in 2022. But look, everybody knows it's difficult to predict the future and time the market, right? Anybody that's invested in stocks, the used equipment values move the same way. It's very hard to know where things are going to go.
So Snapchat yesterday.
Exactly. But there are some things we can look at to give us a better sense of where we're at today. And if you believe in this concept of reversion to the mean, that indexes do have a tendency to revert back to kind of the long-term trend, one way to envision that is to take our current value trend and just compare it to what is that sort of long-term trend line. If we took out all the ups and downs and all the noise, what does that look like? So this is the same index we were looking at a little bit earlier. It's a bit of a longer view. Here we've gone all the way back to 2016. I think on the past couple of slides, we just really more narrowly focused on the last year or two. And what you can see, again, I'll reiterate, these are kind of the auction markets up and down, but we do see as of today, values running at, kind of somewhere between 12 and 13% higher than their long-term trend would indicate. Now, that does not mean we're about to dive off the cliff and see these values come down, because I would add something I said earlier, that line continues to inch up and up and up. So I don't know when the market will shift. I liked some of the comments we were talking about earlier around transitory phases. These high values are certainly a transitory phase, as well as we're dealing with supply constraints. But I do think it would be prudent to expect the markets will normalize at some time. New equipment will start to flow at the levels that demand requires it. And at that point in time, I would expect to see some downward pressure in value. When that comes, hard to say. Hard to say.
No, good point. Good point. And as we to kind of bring us home here, as we think about 2022 and we talk about demand, we know that specifically in our space, February is a big month. It kind of kicks off the year, right? As you start to think about where our value is going to fall, where is supply, where is demand. Um, Orlando has always been that event, and I'll talk a little bit about that in a second. But you start to look at the demand as we head into that particular sale, and even though there's less equipment around, in a sense, the demand as we measure it in terms of people registering for the auction or people looking at equipment, continues to skyrocket. And there's a number of impacts here from we obviously know the macro environment plays a role, at the same time, right? We know that digitization plays a role, right? More and more people can now buy at these events from around the world, right? We've digitization has impacted all industries, and we see this a lot in our online metrics. And one of the interesting things, we started these discussions, just mention it to those of you out there, we started these discussions back when the pandemic hit, because we weren't able to meet, right? So for those of you who don't know, Orlando is actually going to be live for the first time since 2020, and we're looking forward to seeing folks who come to Orlando and welcoming folks, and quite frankly, having those discussions like this that quite honestly we used to have in the bar at the Omni. Right. And so it'll be good to get back and see everyone again. And we're looking forward to that. As we kind of wind down here, just once again, same sort of thing. We got a lot of questions today about demand, and so forth. And, we see it, we talked about digitization. We see it in our metrics, right? Just, continued more and more interaction online. I mean, COVID's had that impact on all of us. right? We're all remote here. We're doing this over Teams. We've seen that in terms of, what's gone on at Ritchie Brothers, right? I used to like to say it was a dirty little secret, like even before the pandemic, 70% of our transactions were online, and now it's, until we go back live at Orlando, now it's 100%. And so, once again, I think that's, Chris and Carl Gustav talked to, this changing world that we're in, access to the internet, access to multiple channels. We've got questions about, operating machines remotely and connectivity. I mean, we're still going to see those trends dominate, as we head into the next couple of years. And, like Chris said, what's it going to look like? Well, ask me in 5 years, but I know it's going to be different, right? I think we all know it's going to be different. With that, we got kind of an interesting question. I gotta take a look at this, I wish RBIP would have an ICO tokenization, right? So I could stake capital and appreciate capital to be used for equipment purchases. Uh, you know, uh, as a child of Web 1.0, and as somebody who lived through Web 2.0, I'm coming to you from sunny California. I am actually, following these concepts that are starting to drive what, most folks out here call Web 3.0. I don't think I'm going to quite move to Miami just yet, but I do think it's a trend that we watch closely. I mean, I think if you look at some of the changes I've seen at RB, over the years, kind of related to the stuff we've been talking about. Look, this industry is changing, right? The way we transact around machines is changing. The way we think about, buying and selling, the way we think about managing assets is changing. And, I would argue, I came into RB through an acquisition, and I would argue that we are rapidly looking at a lot of this stuff, more so than we've done in the past. And I wouldn't be surprised if I think ideas like this are very, very interesting. And it's by the way, it's what keeps me coming back to work every day, and I'm excited to take a part of that. So this was, we're at the hour, right? These were great questions. Just want to make sure we don't have any more. This is, fascinating. This is one of the best ones we've ever done. Love the participation today. I want to thank Chris, Carl Gustav, Doug. Amazing. Quite frankly, this year, hope to see you guys in Orlando. For those of you in Europe, hope to see you in Bauma. Let's continue this discussion, but thanks again for the participation today, and we'll talk to everybody soon. Have a good one.
Take
Stay
care.
safe out there.
Thank you.
Bye.
Bye.
Bye-bye.